Hello, welcome to our classes. I am Dr. K.K. Mishra. Through this video tutorial, I will be discussing today Companies Act 2013 Part 1st. In this, I will be discussing the theoretical view of Companies Act 2013, which is actually the result of the changes which have been brought into the erstwhile Companies Act 1956, now that is known as Companies Act 2013. Mind it, only the key highlights or the changes specifically which have been put into the old act I will be discussing here in Companies Act 2013. Company Act 2013 main topic here I will be covering company and its type. The 1956 Act has been in need of a substantial revamp for quite some time now. To make it more contemporary and relevant to corporates, regulators and other stakeholders in India, the bill was then considered and approved by the Rajya Sabha too on 8 August 2013. It received the President's assent on 29 August 2013 and has now become the Companies Act 2013. The changes in the 2013 Act have far-reaching implications that are set to significantly change the manner in which corporates operate in India. In this publication, in fact, in this video tutorial, we have encapsulated the major changes as compared to the 1956 Act and the potential implications of these changes. We have also included, where relevant, the provisions of the draft rules which have been issued by the Ministry of Corporate Affairs, known as MCA, till date for the consumption of the public or public comments. The Act 2013 has introduced several new concepts and has also tried to streamline many of the requirements by introducing new definitions. In this video tutorial, some of the new concepts and definitions in brief will be covered. Lot of inclusions which have been highlighted and I will be putting emphasis on, that will be specified and discussed through this video tutorial. A few of the changes, significant aspects have been discussed in the detail in this video tutorial and the video tutorials followed by this part. Now first, here I would be covering types of companies. First highlight is one-person company. The 2013 Act introduces a new type of entity to the existing list, that is, apart from forming a public or private limited company. The 2013 Act enables the formation of a new entity, a one-person company, also in short known as OPC. An OPC means a company with only one person as its member as per clause of 1 of section 3 of Companies Act 2013. Now, what is a private company? The 2013 Act also introduces a change in the definition for a private company. Inter alia, the new requirement increases the limit of the number of members from 50 to 100. This in detail is given in section 2 clause 68 of Companies Act 2013. So here it is a main point to understand. Earlier the view, in fact I must caution the viewers and others, those who are in the knowledge of Companies Act 1956, they know only that a private company can have only 50 members. Now here the rider is that the number now has been increased to 200. A small company. A small company has been defined as a company other than a public company. First, paid up share capital of which does not exceed 50 lakh rupees or such higher amount as may be prescribed, which shall not be more than 5 crore rupees. 2. Turnover of which as per its last profit and loss account does not exceed 2 crore rupees or such higher amount as may be prescribed, which shall not be more than 20 crores of rupees. As set out in the 2013 Act, this section will not be applicable to the following. First, a holding company or a subsidiary company. Second, a company registered under Section 8. Third, a company or body corporate governed by any special act, Section 2, Clause 85 of 2013 Act. Let me tell you here that I am not giving you the details of Companies Act 2013, as earlier I spoke that I would be just covering the highlights or the changes which have been brought into the earlier Act 1956. Another one is Dormant Company. The Companies Act 2013 states that a company can be classified as dormant when it is formed and registered under this Act for a future project or to hold an asset or intellectual property and has no significant accounting transaction. Such a company or an active one may apply to the ROC, that is ROC, in such a manner as may be prescribed for obtaining the status of a dormant company. The detail of this is given in section 455 of 2013 Act. Now I will discuss here roles and responsibilities. One, say officer, the term included here. The definition of officer has been extended to include promoters and key managerial personnel. Section 2, Clause 59 of Companies Act 2013 highlights this particular term. Key managerial personnel. The term key managerial personnel has been defined in the 2013 Act and has been used in several sections, thus expanding the scope of persons covered by such sections. Section 2, Clause 51 of Companies Act 2013 highlights this fact. Now, promoter. Who is a promoter? The term promoter has been defined in the following ways. 1. A person who has been named such as in a prospectus or is identified by the company in the annual return referred to in section 92 of Companies Act 2013 that deals with the annual return, or who has control over the affairs of the company directly or indirectly, whether as a shareholder, director or otherwise, or in accordance with whose advice, directions or instructions the board of directors of the company is accustomed to act. The proviso to this section states that subsection C would not apply to a person who is acting merely in a professional capacity. This is given in detail, section 2, clause 69 of Companies Act 2013. Now, independent director. This is another term. The term independent director has now been defined in the 2013 Act along with several new requirements relating to their appointment, role and responsibilities. Further, some of these requirements are not in line with the corresponding requirements under the equity listing agreement. The detail of it is given in section 2 clause 47 and 149 clause 5 of Companies Act 2013. Now, investments. Here in this category, first term, that is subsidiary. The definition of subsidiary as included in the 2013 Act states that certain class or classes of holding company as may be prescribed shall not have layers of subsidiaries beyond such numbers as may be prescribed. With such a restrictive section, it appears that a holding company will no longer be able to hold subsidiaries beyond a specified number. Section 2, Clause 87 of Companies Act 2013 states it clearly in detail. Now let us come to another term, that is financial statements. Herein, conflicting definitions. There are several definitions in the 2013 Act divergent from those used in the notified accounting standards, such as joint venture or an associate, etc., which may lead to hardships in compliance. Financial statements, herein another term, financial year. It has been defined as the period ending on the 31st day of March every year, and where it has been incorporated or on or after the first day of January of the period ending on the 31st day of the March following year, in respect whereof financial statement of company or body corporate is made up. Section 2, Clause 41 of Companies Act 2013 states this clearly. While there are certain exceptions included, this section mandates a uniform accounting year for all companies and may create significant implementation issues. Now, consolidated financial statements. The 2013 Act now mandates consolidated financial statements. In short, it is known as CFS for any company having a subsidiary or an associate or a joint venture to prepare and present consolidated financial statements in addition to stand-alone financial statements. So this was all about this video tutorial. I have, as earlier, I made it clear that I am not going to dwell on the entire law, rather only the key highlights I have covered. I hope that this will be helpful to you, and if you have liked it, please do not forget to subscribe my channel, our classes, and press the bell button and pass it on to others, those who are needy now and in the future. Thank you. Please like, share and subscribe. Thank you very much. Have a nice time. Best of luck.